Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 2nd. My name's Eric Wilkinson. I want to tell you some different ways that we can learn to trade options, and I'm going to teach you these different strategies that you can then implement into your portfolios, but please do that in your own way. And also remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Not a whole lot to see there. We did get some minor stuff in the form of like PPI, producer price index, came in slightly lower than expected. That isn't the major number to look at. We remember, look at the flash PMI numbers for that, all right, overseas anyway, but that was out of Great Britain. We also had construction spending, and that came in at 49.7, expected to be 49.8, so a little bit lower than expected there. So that's not a very welcome sign. It's the second time in a row we've seen that number come in below 50. Then moving back over here to the United States, we got core durable goods orders coming in at 0.1%, expected to be 0.3. Again, lower than expected, not what we really want to see here. Durable goods orders came in at negative 1.6, expected to be negative 1.1. And that's about it. Total vehicle sales comes out throughout the day. So if you watch Phil LeBeau, he's going to be a pretty good one to on Twitter to give you some information on that. All right. So let's talk about the overall markets. We've got crude oil in positive territory right now, but it just seems like the overall markets, depending on their direction, are starting to look a little bit weak. Whether they were rallying, they're starting to look a little bit weak. And on the downside, the downward momentum is starting to slow a bit. So I am starting to cover a lot of my equity trades. Remember, I was very bullish, very long delta. I've been covering those the last couple of days, and I'm looking to start adding some negative deltas to my portfolio. So we'll talk about that once we get into the nitty gritty of the portfolio and the trades that I've done. But let's talk about directionality of crude oil. Like I said, it's starting to look like it's getting a little toppy here. I cannot really see crude oil going up into the 70s or anything, even into the upper 80s. That's going to cause the gas prices to spike too much. Right now, I don't think that we're seeing that strength in the economy or for demand for oil right now to facilitate that kind of move. So I think that we are going to kind of ping back and around between the mid 50s and the lower 60s. Okay, I've talked about that. I think the market's going to try and press it as hard as they can to the upside. But at the end of the day, we've seen some of these durable goods orders and stuff like that. Manufacturers are going to start thinking they need to start pulling back a little bit on production, I would have to think. That will affect demand for crude oil going forward. Anyway, so moving on to gold futures, we could see them kind of roll back below that 1300 psychological level, but it also coincides very well with the value area high and the value area low. Most time and volume has been spent below this area, but you can see this volume node kind of starting to pick up. Hey, let's start playing around with some stuff here. But you can see that we are starting to see volume, the volume profile build up right here. Okay, so with that being said, you can't really see it very well. I thought I had this switched over to my red pen. Let's pick it up a little bit so you can see it. Anyway, what we're starting to see here is that volume is picking up around this area. That means that price is being accepted in and around this 1300 area. We've talked about that being a psychological level. We should see this point of control move higher as more volume. And once that happens, then this whole area becomes the magnet right there at the 1300 area. So that's what we're going to be looking for crude oil. I've talked about it before. I don't know that, gold futures. I don't know if we can really sustain a 1300 handle because the equities were starting to rally, right? That should cause a little bit of pullback in gold as it is no longer a flight to safety. Now, if we start seeing the equities start to roll over a little bit here, we could see another move higher in gold futures back up into that 1300 handle. And because the point of control is right here where I've talked about, that could very well be where we kind of start to slow down here a little bit for the foreseeable future, okay? So keep that in mind as well. And then moving on to the VIX. VIX is trying to climb a little bit higher here, but it's not necessarily because the equities are really falling out of bed. It's just that they're having a real tough time making any kind of directional move today. It just seems like it is a real battle of the bulls and the bears within a very tight range, but it is causing VIX to start to move higher a little bit, as we would expect once we start reaching highs that we are, and the market wanting to kind of at least cover itself, right? Because you can see we've pierced above this area right here, or we're very close to it. I thought we were going to have pierced it yesterday when I was looking at it, but you can see that is a tweezer top or triple top, whatever you want to call it. But today, very inside day here as the market's trying to make that move. And hopefully I didn't just lose my entire computer. Seems like we are still taping, but I did lose my platform. Hold on, let me pull that back up. Give me one. Okay, I'm back up and running. Got this figured out. Okay, we talked about the Dow Jones. It is looking like a very inside day, despite the fact that we're up 100 points on the day. One thing I think I forgot to talk about here was the bonds. We talked about this. They were way overdone to the upside. Interest rates are going to remain relatively unchanged. So I think that now that we are back down into this area here, we can take a look at with the chart here. Let me see if I can pull all this up and do this seamlessly. As you can see, once we get back down into the value area, this is where we have seen the market find value. So I think that we are overextended to the upside. We've gotten above the value area high. There is some volume being built up here, so I don't expect it to really slam back down, but I do expect it to come back down into this area, because I don't think that interest rates are going higher or lower. I think we're going to be pretty much staying about where we are right now for the remainder of 2019. That being said, the bonds really don't have anywhere to go at this point until we get some more clarity on the economic data. But as of right now, it's kind of a hold for me. And then we can go over and look at the NASDAQ. We can take a look at the NASDAQ. It is pushing higher, testing that value area high again today. But again, just not a whole lot of momentum. We're losing a little bit of volume here, as you can see from all of this. One thing to note, we did see that the point of control in NASDAQ was being accepted at these higher levels, as you can see. We did have the point of control just slightly lower down in this area. Now we're starting to see the 50-day crossover the 200-day to the upside. That is very bullish, actually. And then we, on top of it, got this value area or the point of control moving slightly higher, both time and volume. So price is being accepted at the higher levels. That means that is the new magnet, is right up here at the 74.14 in the NASDAQ. That, I think, is going to kind of trend here a little bit more. We might see it bounce back, fill in a little bit of this area here, which is what we see a lot of times, especially right between 2 points of control when they start to shift. We'll see some of this area in here start to fill in to make it a big, huge, or a bigger, what am I trying to look for? Curve, anyway, for lack of a better word. I'm trying to think of what the yield, or not the yield curve. I'm brain dead right now, you guys. I'm sorry. Anyway, so let's move on to the next market. I can't think of what I'm trying to say there. All right, E-mini S&Ps. Let me try and move this out of the way so you can see that E-mini S&Ps topping out, did break above this high where NASDAQ really struggled. But again, getting a little overextended, I would expect this point of control to start moving higher as well here relatively soon. So that's what we'll be looking for, is a shift higher, price being accepted at higher levels. Okay, so that's what I would expect to happen here pretty soon, especially as we are starting to build it up in and around this area. Okay, so look for that to happen. It could happen today or sometime this week. And then on to the E-mini S&Ps. Before I was looking at it, it was like the entire curve was above yesterday's value area high. One thing to note when we're trading this trade, though, we could easily look at it as when we settle in, if you have a lower risk parameter, once you get inside of yesterday's area of control, So when we start looking at the value area high and low, and we're starting to trade off of that in a day trade, what we would look is at the previous day's trading range. So we got the value area high and the value area low. If today's market trades down and settles inside of this area, which is what it's looking like, then one would expect to take a short position and play it down to this level, the point of control. That is if you have a lower risk tolerance. Another one would be once you break into this area, into these areas, that's where you could short it. If you have a higher risk tolerance, cover it at the point of control or at yesterday's value area low. So those are a couple of areas to look at. If you're day trading this, I'm not going to play that, but you can see that that's where you would trade the point of control on a daily, or the market profile on a daily basis. All right, now Netflix. I talked about this yesterday. I covered this. I actually tweeted out my daily market commentary, and then later on when I got hit on this Netflix trades, that's when I decided to cover it. So with Netflix, if you guys remember, we were playing this trade by selling some high volatility in and around an area where there was a earnings. I messed up on this. My chart wasn't showing the earnings on it when I originally sold this trade in high volatility. So I got a little bit lucky, especially with just the theta decay and a little bit of the directionality. That helped me as well, I'm not going to lie. And I went into the April and had sold the 270 puts in there for around 69 cents. I was able to buy those back a little bit better than 50% of my max profit for 26 cents yesterday afternoon. That was on that move higher. It was more of a product of delta helping me out there more than volatility. So even though I was entering this in the wrong market, I did get the directionality right, which really helped me. And volatility coming out did not, obviously, because I put that on in a binary event, which is a no-no, but that was a mistake. That's why I was looking to cover that one relatively quick. But that move higher let me off the hook. So we all make our mistakes, right? Next time I need to make sure I pay attention to that, or make sure it's on my chart that I'm looking at. All right, Lowe's is a trade that I decided to go in and add some short deltas. Remember, I was talking about this. I'm covering some long deltas. It looked like the overall market might be topping out. So I'm looking for some chart patterns that might indicate that this is getting a little long in the tooth. And we always talk about this. Once the market gets outside of this value area high, it does have a tendency to lose some momentum. But some of this volume and everything else that was happening has been from earlier on in the year. So that is price acceptance. The real volume and time has been spent way down here at $98. So we've gotten above that $100 psychological level, which just happens to coincide very closely to where the value area high is. Once you get above that psychological level, people start having a tendency to accept that a little bit quicker than we would normally see with just ebbs and flows of money on the market profile. Okay, so we have pushed higher. We're seeing this crossover of the 50-day and the 200-day moving average, which is a bullish signal as well, right? So all of that being said, I'm the contrarian today and trying to buck this trend. I think that we're going to see a little bit of move back down, especially with yesterday's big candle. That's just a very bearish signal to me. It looks like we are ready to move lower. Having said that, I haven't put this on as a big position. I just did it as a directional assumption. There's no confirmation to this, so I did it smaller than what I would normally do for a premium buying strategy. It's a little bit smaller than normal. So anyway, I went into the June and bought the 105 puts in there for $3.05 this morning. I'm looking for this market to cover back down. What is it? I said I was doing the 105 puts, which basically lines up right here. If I just get that kind of move like we got yesterday, I will easily be able to see myself get out of this trade for a 50% increase in that premium value, which would be trading right around $4.50. That's what I'm looking for to get out on this trade. So we get a move like that yesterday, or even over the next couple of days, I'm going to be able to get out of that trade rather quickly. Having said that, with this trade, if we trade above yesterday's high, I'm pulling the ripcord on it. So the market moves up, we get above here, I'm out. All right. out of that trade and out down here. So either way, those are where my ins and outs are with this trade. Because I did it as a market setup, I'm going to get out of it if it breaks the pattern that I was looking at. All right, and then Macy's was a trade that I covered for a profit. This one worked out quite nicely. And if you guys remember, I went into Macy's and did the May, bought the 24 calls in there, and I paid originally $1.25, I think it was. I'll have to double check on that. I want to say $1.24 for some reason, but that seems off. It was $1.24, paid $1.24 on those, and I did that on March 11th, and then basically took till today to get out of those. It was a slow trudge higher, right? But I'm just looking for it to go back to this point of control down here. That's what I was looking for this trade. We came up and it tested my strike, right? We can see that we are testing it. I'm in the money on those at that point, but that's all we're looking for those, right? I tell you where we pick those strike locations based on the probability of being touched, and we kind of try and pick a lot of times little areas where I think it might go to, whether it's a Fibonacci extension or resistance level or something like that. Once we achieve that, we probably have achieved our increase in value that we're looking for. So it follows those rules. And with that being said, I was able to get out of these Macy's for $1.89. So that take $1.24 divided by 2, add that into my price. That puts me right there at about $1.90, and I was very close to getting that increase of profit. Might have been able to squeeze it out a little bit longer today, but I came up and achieved my objective. It tested my strikes, so that's why I decided to get out. You plan your trade, write it down. I talk about this all the time, and then you trade your plan. You hold yourself accountable by writing it down. Don't just keep it up here in your head. Make sure you write it down so that you don't cheat yourself out of getting out of those at the right time. So, and then finally, I'm looking to get out of my IBM trade. It's actually getting away from me here. And if you guys remember, I have on the May, I bought the 145 calls in there. We didn't quite get to that 145 area. I paid $2.70 for them quite a while back, or a little while back. So I was looking to get out of this trade at around $4. I think the high I saw was $3.80 or something. So it's about 20 cents away from that. And now we can see that we're really starting to come off. So I might have missed my opportunity to get out of that 50% increase in profit that we're talking about. Also, with the way that the charts are setting up right here, I am looking at that chart and looking at this little doji we got going on right here. And this is looking pretty bearish. So to me, we've gotten this little move higher. We've gotten back to the point of control where I would expect us to start settling down, right? That's where we would find comfort. So I'm not going to be too quick to the trigger today, but tomorrow, if I start seeing continued bearishness, I might just end up covering this despite the fact that I haven't been able to achieve that 50% increase in profit. It's going to be looking like it's rolling over or something. But again, later on today, we could see a push higher. So I'm just going to hold on to this a little bit more tentatively than normal. Okay, that's all I got for you guys. Other than Thursday's webinar is going to be a really good one. Check it out. We're talking about how to set up an option strategy when you already have the assumption. I come up with the directional assumption, or you come up with the directional assumption. I'm bullish or bearish in XYZ. I'm going to take that stock, and then we are going to find out exactly which is the correct strategy to increase your probabilities of success with your directional assumption. So check it out at protraderstrategies.com. That's all I got for you, other than if you can't take that, take it easy. Oh, hey, wait. One other thing, comment below. Let me know how you like the new setup here with using the charts and the drawing patterns and stuff like that. So let me know how you like that. And give me a thumbs up, thumbs down, like or dislike. Let me know what I'm doing right or wrong if you don't like what I'm doing. All right? So take care.